Hello everyone, my name is Ellen Roche and I am with Movement Mortgage and I'm here today to talk real estate. I'm with Judy Moynihan from Century 21 Northeast and we have a special guest, Maria Rogers, attorney Maria Rogers from the law office of Maria Rogers. And what we're going to talk about today is closing costs. So many people don't realize that when you do go for a mortgage, not only do you have your down payment, but you also have closing costs. And we're going to talk about what the closing costs are, and also we're going to talk about what happens at a closing. So I'm going to start off by asking Judy, when people come to you and they make an offer, do they often ask for closing costs to get that money back from the seller? Because I have people that come to me and they often ask if they're allowed to do that.
They are, allowed to do that. Again, it's a kind of a luxury of our old market. We're having trouble rolling them in. They have to be able to cover those costs.
Right.
So they're able to do that. You can negotiate it, but each transaction is specific.
Okay. So if I'm the buyer and I'm going to put an offer in on something, and let's just say the sales price is $300,000. If that's going to happen, I'm going to have to go over and above the sales price to get that money back towards closing.
Yes.
Okay, that makes sense. And let's talk about that as far as what those costs are as an estimate. Today, you're looking anywhere from, what would you say, Maria? Anywhere from like $10,000 to $15,000 for closing costs today?
Yeah, that would be a great average.
Yeah, that's, and Mass is a little less than New Hampshire because New Hampshire closing is going to be more because you have tax stamps. And Maria can get into that with you when she's talking. But let's just also real quick talk about the closing costs that that you have to pay up front. Normally, you have to pay for an appraisal fee up front, but that is considered part of the closing costs. And sometimes some companies will make you pay a lock-in fee up front if you want to lock in the loan. What are some of the other fees that we can talk about, Maria, that that would help people prepare to buying?
So what I did is I actually brought a sample closing disclosure. And what it is when we sit down at closing, this is the document that breaks down for everyone what all your closing costs actually are. And it's kind of broken down into 3 sections. So you'll have your first section, which are what you just talked about, was the mortgage costs. So it consists of your appraisal fee, your credit report fee, possibly the flood cert or other tax checks they need to do, anything that the mortgage company needs to do to process.
And also, if I just wanted to talk about this real briefly, points can be part of closing costs.
Yes.
So let's just talk about that real quick. 1 point is 1% of your loan amount. So if your loan amount is $300,000, 1 point would be $3,000. And people are paying points today to buy the interest rate down.
Correct.
In some cases, you can buy the interest rate down a whole percentage point. So it does make sense. I've noticed a rule of thumb that if you're going to be in that house 5 years or more, then it makes sense to pay points. But if you're not, it's really not going to make sense. And Judy, people usually don't stay in their home for, how long do people usually stay in a new home when they buy it?
Usually a couple years right now. You're finding people are turning over more than they did before. Before it was a whole family and they just lived there for 20, 30 years. You don't see that. People are on the move.
Yeah. Whether it's a new job or upgrade or downsize, you just don't know.
Yep.
So points are part of the closing costs, and they can help as long as you're going to stay in that house, let's say 5 years or more.
Right. And that can be a bonus if you are negotiating with the seller for seller closing costs, because that's one of the closing costs that could be used with those funds.
Right. That could be a seller-paid closing cost.
Right.
Yes.
Right. So that would be your first section. Your second section really goes into the legal portion of it. So it's like the examination of title, the attorney fee. We have engineers that go out and do a plot plan to make sure that the property or the house or all the buildings on the lot are sitting properly on the lot. And then we have title insurance, which we'll probably get into a little later. So those are all your legal fees. And then the last portion would cover your government costs, which would include your recording fees to the Registry of Deeds to record your legal documents to make the transfer official with the registry, and then your taxes, your property tax, and your homeowner's insurance. So that's kind of how all the fees are broken down.
And so for homeowners insurance, what we require when you go for a mortgage, what's required is you have to pay a whole year up front for insurance. So that could be anywhere from like $800 up to $1,500, depending on what you're purchasing, whether it be, you know, the condo, single family, multifamily. Of course, it's going to have different prices. But those are the prepaid. You got to pay a year ahead with the insurance, and depending on the town, or depending on the state, I should say. Tell us about that, you know, New Hampshire versus Mass.
So New Hampshire, you're going to find higher closing costs because property taxes in general are a lot higher than they are in Massachusetts. And also the transfer tax. In Massachusetts, only a seller is required to pay the transfer tax, and it's much lower. New Hampshire has a higher rate, but it's split equally between both the buyer and the seller. And that basically is a tax stamp that's paid when the deed is recorded to the state.
Now, I'm pretty sure, correct me if I'm wrong, but that's $7.50 per every 1,000 for the tax stamps.
In New Hampshire.
Yep.
Yeah.
And that's based on the sales price. So if a sales price is $500,000, it's going to be 500 times $7.50. So that can get up there, and that would be the reason why New Hampshire would be higher.
Right, along with the property
And
taxes.
the taxes are due biannually, where in Mass they're due quarterly. Yes.
Right.
Yeah. So what are you seeing, Judy, right now in regards to, are sellers allowing closing costs concessions? Are they allowing money back towards closing, or?
Well, I think if you explain that to them, they usually see it's okay. It's not coming out of their pocket. It's getting added on to the client's mortgage. But we run into a problem with appraisal. They're offering top dollar for the home. So now if you want to roll in $10,000 worth of closing costs, for example, this house that costs $300,000, I'm going to put in a mortgage for $310,000, asking for the seller to cover $10,000 of the closing costs.
So, and then the
a lot of
appraisal
times it's
has
not
to come
appraising
in.
out.
Right.
And that's a problem. The bank
Right.
says, that's great if you want to pay $310 for it, but it's only worth $300, and we're not going to, we're not coming up with that other $10.
So it's important for that buyer to be aware of that up front, so we don't run into problems
You need
during
the
the
money
process.
set aside, or just find a house that you can do that with. But right now, that's difficult.
Yeah.
I've had some cases too where it's been negotiated, but then when the appraisal comes in, it's lower. So then the parties may renegotiate. So the sellers may agree to meet them, in the middle.
Yeah.
So maybe dropping the price. So it's all about negotiation.
all
So it
about
doesn't hurt to ask, I
Yeah.
think.
So one of the things I just want to touch upon briefly is one of the costs that can be financed into the loan amount would be an upfront PMI premium. So if you put less than 20% down, you have to pay mortgage insurance, PMI. Where this, what I'm talking about, this you can finance in a one-time fee to the loan amount and then not have a monthly PMI payment. So that is one thing that does help. So you can, and it doesn't, it's part of that loan amount. It doesn't fall into having to appraise out. So other cost, Maria, that I think that people really should know about too is the odd days interest. Explain that.
Odds day interest, so depending on the time of month that you're closing, you will be charged. Let's say, for example, today we're at the 14th.
Yep.
So anyone closing today will be paying the bank at closing interest from closing date, the 14th, through the end of the month. So that fee will also be charged as a closing cost.
So you have to pay that interest up front, but then your first mortgage payment, you skip a month. So if you're going to close, say the 14th of May, your first payment is going to be July 1.
Correct.
So you skip that month of June.
I always tell people mortgages are opposite from rent. Rent you always pay in advance, but your mortgage payment, you're paying the interest in arrears.
Right.
So when you make a June 1 mortgage payment, that's paying all the interest of May.
Yeah. And I will say one other thing too. If you did close on the 1st, usually if you close on the 1st to the 6th, you can do what's called an interest waiver, but then your first payment is going to be June 1, like that you don't skip that month.
Right, right.
Yeah.
Yeah. Then there are also, if you're looking into a condo, or especially a new condo complex, there may be additional costs. Judy, you're probably aware of this, where you have to pay into reserves, or a one-time fee for a new homeowner in a condo association. So you want to make sure that you review the condo docs when you're getting into something like that, because those will be additional costs, and those can usually be a few months that you're paying.
Yeah. Do you review those for potential home?
I do.
So that's good. That's good to know.
And we offer a complimentary review of the purchase and sale agreement as well for many of the lenders, customers that we work with.
Yeah, I knew that.
Yeah.
Yeah, so what else do you think would be something that we should let people know about in regards to closing? How about the documents that people sign? I think customers, don't you find this, Judy? Buyers they get so nervous to go to the closing, especially first-time home buyers, because they hear there's so much paperwork to sign. And
Right. So a lot of it, I always tell people, half the closing package you'll find is duplication of what you signed with Ellen with the application, because you're going to see your application again and all those disclosures that you signed with them. The important pieces that you're signing with me, and I usually bring those up first and foremost so they can sit down and really absorb it, is the closing disclosure that we just talked about with all your closing figures.
And usually we have to get that to people 3 days prior to closing. That's a big deal nowadays.
So, and it's a great thing too, because people get to review their numbers and ask questions.
See if there's any mistakes.
So there aren't any surprises when they get to the closing table.
Right.
So that's something nice that's happening. Then also at closing, you're going to find the note, the promissory note, and that's probably the most important piece you're signing at closing, because that's your contract with the lender, and it's going to go through the terms of your loan, which is your interest rate, whether it's fixed or adjustable, how long is that term for, what the principal and interest is. So, we'll go through that entire note and make sure that all those numbers match up with what we saw on the CD.
Yeah.
And then we have the mortgage document, which is the security instrument that we record with the deed, which is the title to the property. And that just reflects that there is now a mortgage lien on that property to secure the loan amount.
And that mortgage will also let you know if it's a 15-year or a 30-year.
Correct.
And all of that is public, right? Like in the registry of deeds, it's all.
Yes, anyone can hop online and take a look at all your documentation once it's recorded.
Well, this is all wonderful information, Maria. And I wanted to just reiterate too, so the closing disclosure that you're talking about, when you apply for a mortgage, you have we as mortgage lenders have 3 days to get to a buyer the estimate of those closing costs. And you really should take that estimate that you got up front and compare it to the closing disclosure 3 days prior to closing to make sure that those numbers pretty much match. Because lenders today can't go in and change numbers or up fees without anybody knowing. Everything has to be disclosed. Everything today is transparent. It's not like the Wild West days of 2007. But excellent information, Maria. Thank you very much, and thank you, Judy, and thank you all for tuning in.